Hi, it's Brad Simmons from Ocean Consulting Services. Thanks for joining us. Today we'll be talking about marriage and taxes. Whose debt is this? Let's start off with the highlights. Marriage and taxes obviously are intertwined. Marriage may determine how you can file your tax returns, and how you file your tax returns may determine your liability for any taxes that are showed as owed. Tax returns are an individual obligation. They're not an obligation imposed on a married couple. Now, married couples can elect to choose to file a joint tax return, but again, the default is that every taxpayer has their own individual filing obligation, assuming their income meets certain thresholds. Now, the joint filing of a tax return creates what is called joint and several tax liability. The IRS can pursue taxes against either spouse up to the full amount of the tax. It's important to realize the financial obligation that arises and the liability that arises with respect to filing a joint tax return. Let's talk about an example. We have Larry, who's an employee who has wage withholding, and his income's reported to him on a W-2 each year. We have Martha, who is self-employed and should be making estimated tax payments to cover her tax obligation. They were married in 2021. In 2020, they each filed as single. Larry had an overpayment reflected on his return that he wanted a refund, while Martha owed taxes because she hadn't paid enough in estimated taxes. Martha has not paid her tax obligation, so it exists when they get married. The issue is, does the 2021 marriage or how they file taxes impact the liability for that debt? And the quick answer is no. The IRS can only pursue Martha. That's her individual tax debt. The fact that she's now married to Larry and whether or not they file a joint return for 2021 doesn't impact the liability that Martha has individually. So Larry is not liable for that debt. Now let's take the example further. Our second example is they do elect to file a joint return in 2021. As mentioned, Larry continues to have withholding, but this year Martha pays no estimated taxes. What happens on the joint return? Well, their income and deductions are combined to arrive at one tax amount, and against that tax amount, Larry's withholdings will be considered, but most likely there'll be a tax due because Martha hasn't paid estimated taxes. Now, as mentioned, there's a joint and several liability for the tax shown on that return. The IRS will pursue Martha both for her 2020 tax and the entire amount of the 2021 tax. They'll also pursue Larry for 100% of the 2021 tax. Now, of course, the IRS can't collect more than is owed, so if they collect the outstanding 2021 taxes, they won't pursue additional collection, even though they can pursue each of Martha and Larry for the full 100% of the tax. Now let's bring it a step further. At the end of 2022, they get divorced, and the divorce agreement says that Martha has assumed all responsibility for back taxes. What impact does this have on the IRS? Absolutely none. It doesn't impact the collection of tax. They're still jointly and severally liable for the tax shown on the joint 2021 tax return. The fact they had this agreement, which did not include the IRS in the agreement, has no impact on the collection of the tax by the IRS. Now, of course, Larry may have an action against Martha if he ends up paying the tax, but that doesn't involve the IRS. It's a common misperception that people can avoid paying the IRS based on a divorce agreement. That is not correct. The IRS will not take that into consideration in trying to collect a joint tax debt. One question that arises with respect to joint tax returns is, was there a valid joint tax return filed? If there wasn't, then there is no joint and several tax liability. So what are the factors the IRS considers when determining whether a valid joint return was filed? Well, first of all, were the individuals married? If they weren't legally married, then they couldn't file a joint tax return. Were the tax returns signed by both taxpayers? If the tax returns were not signed by both taxpayers, was there an implicit authorization or an explicit authorization for one taxpayer to sign on behalf of the other? If the returns were signed by both taxpayers, was one of the taxpayers under duress? Was there abuse involved? Was there financial abuse involved where one taxpayer signed the return but it was under duress? What if there was a forged signature? What if one taxpayer prepared the return and then forged the other person's signature? Did one spouse file their own tax return as married, filing separately, while the other filed a joint return? That could impact this determination. Did they both have a filing obligation? In other words, if one is a stay-at-home individual and the other is working outside the home, then maybe the stay-at-home person doesn't have a filing obligation, and that may impact whether a valid joint return was filed. Were joint returns filed by the couple in the past? Did both taxpayers participate in the preparation of the return? And was there a benefit in filing a joint return? So again, these are all factors the IRS would look to if a taxpayer tried to argue that after filing a joint return, that return should not be considered valid, and therefore the liability should not be joint and several. Let's continue on with another example. Now assume Martha prepared a joint tax return, but she forged Larry's signature. Can Larry argue that the return is not valid, since he in fact did not sign the tax return? Well, he may have a hard time making that argument, and here's the reason why. Larry's a W-2 employee, he knows he has a tax filing requirement, but most likely he didn't file as married, filing separately. When the IRS asked him, well, if the joint return is invalid, then where's your individual return? Most likely he didn't file an individual return, and therefore the IRS would not allow him to claim that the joint return was invalid. So in conclusion, again, a joint return is not required. That's a common misperception. The default is single. It's either filing as single if you're not married, or filing married, filing separately if you are married. A joint return can be made by spouses after filing married, filing separate. An amended return can be filed to combine the income into a joint return. However, that same rule doesn't work the other way. In other words, once you file a joint return, you can never go to filing separately. Once a return has been filed, again, joint and several liability. Is there any way out of that? Well, potentially there is. There's something called innocent spouse, and that may protect one of the taxpayers. We'll get into that in our next conversation. Thanks, and if you have any questions or comments, please respond to me via the contact information. Thanks, bye.